Hi everyone, I just want to give you an update. I'm sorry that I've been offline for such a long period of time. Harry and I have been working very hard on trying to get our AI modelling and some ratio modelling uh, up and running and usable for all of you. So you can go in. Harry's put a post in, so you can go in and get your own your own AI reading. Um, I'm finding it's had issues probably because the prompts were too long. Some of the prompts were 1,400 words, 4,000 words long. We've got them back to 1,400 words. It's definitely got them a lot sharper. Um, if you think that you've had a result come in and it doesn't look like the rest of the market, it's a bit odd, just send it through to me and I'll manually check it. But I'm seeing very few issues. I've redone the long term and I'm pretty happy with the way it's looking at the moment. So this comes out 2 hours after the market closes, a little bit faster on Thursdays and Fridays. I then go through and check it. I don't check all of it. I get a pretty good feel for what it's doing. I do check whether it's rolling one way or another. We've had the Russell's been really strong the last few days, even though it's been down a bit. It is really ready to when the vol comes off on Monday, if we don't have any action, which I don't think we'll have any action, even though everyone thinks we're going to, or no action big enough in the Gulf that it's really going to upset things. I did notice that the radars had been turned off, so we can't see maritime movements. Anyway, at the moment, we're definitely getting a roll out of the big technology, and if you did go and have a quick look, it's probably ending up here in the defensive. So we've got it in housing and Walmart and the big retailers, and a little bit, but not quite as strong in the farmers. But there's definitely some there. VIX has sold off hard again even though we've had a bit of downside this week. It was VIXpiration, but there's just huge vol compression going on at the moment as we go through earnings. So that was one of the things. Just let me go back and find where I was. That's the stock watch. I think the stock watch is really good. It gives you a really good idea of what's happening. It's in a form that hopefully is easy for you to read. If you're finding something difficult, just drop me a line. We'll talk through it. I did notice this big build. There's been a lot of buying through the last couple of days in the SPX. I just think that's an incredible amount of buying if we consider how red that we've seen the other stocks in the SPX proxies. But in the proxies, in the SPX itself and the SPY itself, I don't know if I printed one here. We can see that we've had a real strengthening in the money calls and quite a good releasing, even though it was a flat day. Quite a good releasing of in the money puts. So I think we are going to see some upside. I'm going to be buying, definitely looking to buy the market on Monday morning in futures. Sunday night in America. I think that we should get a little bit of a bump. I didn't think gold, even though we did see a bit of a bounce in gold and silver, I don't actually know if I think it's going to hang on. I had a quick look at it. I was just actually looking at the vol to see what the vol was doing. But I think that the positioning, just let me slow this down. I need the 20th, just to get a bit of vision. I just see that we've got a reasonable build here, even though we've got a lot of calls. It could be that it's a bottom, it could be that it's bottoming, and these here are sold puts. I didn't sit and have a really good look. We can definitely see that's a bit too close to the market. We can definitely see that there was some buying in GLD, but look, I reckon that Sogol, the Scott Aberdeen gold, I think it's a really good. Like we see, it really got it right last week, and I think at the same time, I was thinking, are we really going to get some bumps up? The bumps were hard to see. Where we saw this pressure coming through here, I thought that we weren't going to get that last hit up in gold, and got out and got really angry with myself. But it was a hard one because people weren't entering trades, and when they're not entering trades, it's very hard to see what's happening. I just have a quick look at gold and silver. I don't think they've changed. Yeah, look, we've got a little bit of a reduction here, but not a great deal. A little bit of a reduction there in the centre, but only a tiny bit of a boosting. I'm not actually seeing that. The only thing that we might be happening is because vol is so high at the moment, that we've got the underlying moving. Sorry, the internet's very slow. Everyone's watching the footy in Australia tonight, or watching something. Maybe they're watching the Tour de France. So we've seen this really big spike in buying after really quite a staid period. There is some move to stop paper trading of gold and silver in China and get it just into bullion or Ignatz coins. So that might change. But here we can see that might be that everyone was hedged, and so the DPI was just really low. Where they haven't been hedged, they actually left the silver market. But we've seen a really big fill in the silver market and a really big buy, and it just got really squeezy. The dollar didn't have to move a great deal. The Dixie didn't have to move a great deal on Friday's trading, and silver bumped up just out of nowhere halfway through the overnight trade. What we can see is we've got a really strong positioning building here in silver. The puts haven't all come off, but we don't have to go too far. Like, I think it's down to about 0.2, and we really do start to see a much stronger, I think maybe it's 0.17, which isn't a lot of a move. And we might see it back under 1 or 1.5 or something. Oh, look, there you go. It's under 1. So you only have to have a couple of delta move, I don't know, 0.3 delta move, and it's going to be off to the races. Gold, the positioning has changed really quickly. It's in the same sort of positioning that we saw in the last bump up in June, in this bump up in here in June. So gold and silver are well worth watching. I also noted that Google was worth watching. Google had even though it's had this huge drop, it's still held a reasonable number. If you look, it's actually held the same number in the money, 50,000, 53,000 calls in the money in the short-dated options, in the short-dated calls, which is really quite strong. Obviously, it moved in from, down in the 20,000 to that dump down at 300,000 short-dated puts. A lot of profit taking. We've had 130,000 of them closed, so we're down to 180 from 316. I reckon Google's going to fire, and the other reason I reckon it's going to fire is have a look at this buy spike. We've had a really good buy signal, and Google, there's been a lot of accumulation. I know it dropped a lot. That's just because of the vol situation on the market. I knew Tesla was going to get murdered. I thought that we might get through, but during the day, Google really turned. But that buy strike's huge. A lot of people have got back in there, and there was already accumulation in there. I would say we're going to see a big move in Google, something to do with AI. I don't know. I don't know what narrative we'll find, but you can just see how many puts were closed and how quickly, even how strong that position was as we went in. But you can just see all of these puts that have gone into earnings have disappeared. And then if we have a quick look, let's just have a look at the flat. Sorry, I quite like the flat rather than the. It is easier to read the delta, but you can just see here. This is a huge turn after a big day down. Its deltas have turned around down to 25%. So the gamma of delta is going to be right down. So that's going to be a very active one to watch over the next couple of days. I think we've got to have a good run into the start of August. The market's going to be really choppy. I've sent everyone through a video well worth watching of Kem Carson with his ideas of what's coming into the midterms. He's picked it every other time for the last 6 years, so I'd follow it. It's a good guide. This year has followed the seasonality index absolutely on the money. It hasn't dropped off the seasonality index once. You can just look it up if you want at equityclock.com. Well worth having a look to see where the markets are going. Then you can work out when you've got compression, when you've got vol compression, and you're going to get everything flying around. You're going to get dispersion when it's worth to go for dispersion, and then times that there's just lots of big things flying around, you're not going to get any dispersion in little things. So it's worth looking at that seasonality clock. Now, the last thing I wanted to look at, thanks for giving me a moment, was I just wanted to have a look at the new OI charts. Now, the new OI charts are just working on ratios. We know where people trade, we watch where they trade. So, look, there's not it doesn't work for every symbol because there's just not enough traders in every symbol to get people who are, you need to be pretty big to be selling puts. You need to be pretty big to be bull the market and be having tail hedging. So there's certain times that it works really well. We've got an explanation of each of the things here. A couple of them correlate very highly. So the put selling that we see really high here in the days to expiry PCR of out of the money. So it's the PCR ratio out of the money. So everything that's out of the money, we put it into a ratio, and we do it on their days to expiry. Then that's one of the put selling one. The other really strong put selling one, it's looking at a different bit of the ratio. It's looking at the PCR of out of monies, of all the out of monies in all positioning. Not just in the short dated, the 0 to 30 DTEs, which this one is here. And in all, what we see is we get these really strong correlations. So you know when you can stay long the market. Yes, you need to know when to get out, but sometimes there's just no point even looking at it. And this is just a no-brainer. And it's not a no-brainer on everyone. I mean, this is well traded by old traders, people who have got a 401k account. They really like it, and they trade just the same way all the time. So you can just rely on them behaving well and telling you when the market's worth trading. Just look at them getting out here. They're very quickly gone. Yeah, it's a little bit up and down here, but generally, when you're looking at it, they're just the ups and downs coming into OPEX or the end of the month. And yes, a lot of these correlations are coincidental, but when we see it staying for a long period of time from going into what this recent jumps that we've had off the March-April bottom in 2025 and this most recent bottom, we can just see that its comparison is above everything we saw in this pullback period. So we know that we've got tail hedging and we've got put selling, and then it just starts to come off. And every time you see it start to come off, yes, it might be coincidental, but we call tops, tops and bottoms look pretty easy in our charting systems. Yes, you might look at them and go, how do I tell from yesterday? We can go back on the website, on the front of the website, we always have a running detail of our previous day. So you can always go back and clock them. You can also go back into Stockwatch and just go in and have a look how it changes over a period of time. What we will do is we're going to put in a little matrix at the bottom so you can see how all of these things have scored over a period of time. So you can see with a price scale that how correct we are, and we reckon we're around about 85%. And look, on a given day, you'll look at things, and some things won't add up. Like gold and silver all look similar today. Copper and uranium don't look similar. We can see that SPY is moving at the same time. We can see that the IWM and the Russell are moving at the same way. The Qs are moving the same way. That's what we want to see. We want to see more than one indicator saying the same thing, because market makers don't use all of them the same way. They're not all traded the same way. So then when we go and we have a look at the OI charts, they do give us, we did have a good feeling here that this was going to stay up, and we can just start to see it coming down towards the level where we were having this pullback before. And you can just put it into a couple of the other names that you want to watch. Not all of them are good, but most of the big index stuff are pretty nice to you. So here we're looking at the first one. So we're looking at the ratio of in the money calls to out of the money. In the money short dated calls to in the money long dated calls. And one of the really nice things here is people don't trade short dated calls at periods that they're particularly worried about. They also, we get another view on these strong periods. We can just see it's strong, even though it's got its little ups and downs. You're not getting any of these really big pull downs that say this is going to be trouble. It's not going to bounce back up. These are holding on the way through, and you can see here they hold until you know, every now and then there's a little nervous bit, but it's still holding well above any of the baselines. It's not dropped. This would have worried me, and I would have been going, oh, I'm going to get out, because it has dropped. All of this period here I thought was shite. I think IWM does a pretty good job on all of the options as well. Not all of the indicators work really well. IWM is really good for put selling. I think it gives you a good idea. Maybe I'm bullshitting. Maybe I'm on the wrong put selling. Here we go. It's got it gives you a good idea of what's happening in the put selling. Get that price up there a bit. So you can just see that they've dropped out here. So you know you're going into a flat period and it's not going to come back up. You know, I wouldn't have traded all of this. This was just too choppy in the IWM. I don't know what the TWA. You can do industries as well. I was looking at volatility. It's a bit hard to look at. SPX doesn't have the same sort of data as everything, but I mean, you could try the Russell, which is a pretty big index. I haven't looked at all of them. I like SPXL. I like SUVX is good. The Qs are good. SPY's good. So again, this is showing us the number of, you know, short-dated calls, and so short-dated calls are when people are very bullish in the market. So we can see here they're very bullish in the market, and they've got out. They've got out more quickly. You can see here they've got out before the market started to drop back, and they're in back again really quickly, and then they're starting to get out, and then they haven't traded any of this top. That is like, yeah, look, it's just telling us to get in now. I think you're probably right. It's almost worth getting back in. But you'll just see that in these periods that the put selling, you know, here we just don't see any put selling or tail hedging. They're both associated with the same market. We just see that they're getting out here. They're not happy. They've thought about getting back in. A week or so ago, they thought that the semis would bounce, and they didn't. Again, they thought they were going to bounce the other day, and they're straight back out. They realised, no, that was an error, so that they're out. Yes, you might say it's coincidental. What it's really doing is giving you the confidence to not have to stay hedged all the time if it's in your main portfolio. Yeah, you probably do want an out of the money hedge from selling some calls, that, you know, that sort of standard format. But I think that it will do you a lot of good. It's probably better in the individuals rather than it's going to be in the, you know, the huge industries that have got, like that Russell one there, sticking 2,000 things into it, 2,000 bits of information. Yes, it does smooth them out. But here again, we can see that we've had these very strong periods of staying in the market. It's way above nervous periods. The nervous periods, this is an odd one here, but you know, the Qs really didn't drop until into that last period here. I would have looked together at all of those things. I'm going to try and do an automated one of these every day, so we can look across a few of them and give us a good idea. So the ones that I think are good or stand out are this smaller group, but you can go and look at any of them. You know, there's always, in well traded by 401k traders, there are these stocks that just stand out and say, yep, that's what I want to see. This is one that picks bottoms when there's a lot of buying. You can see they try. Oh, sorry, I think this is a bearish one. What have I said here? This data shows the ratio of put calls in the money, and it's good for V bottoms. So it's picked up all of these little V-shaped bottoms here in the spikes, but it was just so choppy. Then it's picked up one, and then it's sat flat. That's sitting flat. You know, if you look at it in the context of the other stocks, you would look at it in the context of the other data sets and ratios, and you would see that the rest of them stayed bull. There was tail hedging and put selling going on. I will just fix up a couple of these little legends here just to make sure they're clear enough. But again, ask me any questions. Sorry it's such a long video. I hope you've had a good weekend, and I'll try and push more video information through. Cheers everyone.